So Aditya ji, things started from the formation of the central banking system. So if we look at the history of how the Federal Reserve was created around 1913, when it went into full kind of a role for the centralized banking for the United States, you realize that the need for central banking stems from two important pieces of governance of statecraft. One is the monetary and the fiscal policy portion of governance, which the central government governance helps with, and second is with the taxation and the flow of credit in terms of people and individual and institutions taking loans, making deposits, and the spread between the loans and the deposits and the lending and the borrowing is what the profits for the banks in general be. So, the politicians have this urge of, declaring freebies when it comes to elections, uh, declaring government schemes which benefit the underprivileged, the retired, and those people who don't have income, etc., etc., to solve poverty, to bridge the gap, economic inequalities, etc., etc. These are the excuses that they have for, declaring mass blanket freebies, food stamps, etc. So, somebody has to bear this cost. So, whenever these freebies are declared, there are two ways of recovering that cost. One is that you lay tax on people and collect the amount for the freebies to sponsor the freebies that you have declared. And second is, uh, you just print more money. I mean, if you just print more money, what happens is the purchasing power of the notes in the people's hand automatically come down. And that is how this is another method of recovering the freebies cost, right? So the politicians require the central banking system so that they are able, because you cannot tax people above a limit. If you tax people directly above a limit, they are going to vote you out next time when the election comes. So politicians need central banks so that they can print more notes and reduce the purchasing power of the currency notes that you have in your hand. And that is how a portion of this gigantic government expenditure or the freebies or the government schemes is sponsored from. One is taxation and second is this. So this was the need why central banking was required. Obviously, regulation of trade and currency, etc., other allied objectives. Why did the corporate? I mean, because as we all know that when the baton of leadership passed on to the other side of Atlantic from UK to US, a few aristocrat families had a consolidation of power in the United States, and that is how the deep state concept came into being. So why did the corporate also help the government in working up this formula of centralized banking? Is because you cannot just drop the amount of payments that you are giving to your employees all of a sudden. I mean, they will realize that you paid them lesser than what you were paying before. So it makes sense for the corporate to get low interest rates loans from the central bank, from the banking formula, and they are able to give a raise to the people, to the jobbers who are doing jobs, and they would not even realize that because of the more printing that the central banks have done, despite their salary has risen, the purchasing power has come down, right? So this is exactly why the corporate and the politician nexus support the centralized banking system, which is why one of my predictions being that the private cryptos won't be allowed to do the legal tender of money usage of cryptocurrencies, which they intend to do. I mean, these won't be allowed. This is the primary reason, because they challenge the central banking. And when we challenge the centralized banking, it means that the politicians and the corporate both are hit, because that is where not just the government schemes and freebies, but also the election campaign funds come from, because through the politicians, through the loans that they get from these banks. So this is how the entire nexus is being created. Coming to the stock markets. Now, one thing is that if you want to create an extreme capitalism environment where few capitalists are going to rule over the masses. What happens is you need to suck out the people's savings or whatever the accumulation of wealth that they have done over a time. So stock market was devised as a vehicle to bring the family corpus or the accumulated wealth of people into the mainstream, and then it was passed on to companies so that they are able to give salaries. And this is how owners of businesses, small businesses, have to compulsory now go for jobs. That remains as the only option. So this is how extreme capitalism works, and obviously this is the Western template where all this is born. Now coming to the stock markets at the present, why it is going down. So there's a little bit of history also about it. So let me take you to directly 1971, when this concept of fiat dollar came into force, where the gold was taken off from the standard, the convertibility was stopped, which made the entire US dollar as a fiat currency. And then in 1973, we had the petrodollar concept in this oil for security with the Gulf. So both these fiat dollar and petrodollar concepts gave birth to the IT sector, the information technology sector in the West, right? And the entire reserve currency bubble got accumulated in the dot-com startups in the late 1990s, right? These are not fair valuations. These are intangibles. At this point in time, the S&P 500 in the US stock markets has 90% value in the intangibles. And what are these intangibles? These intangibles are customer data, brand value perception. So all these are notional values which have bubbled up in the stocks. There is no real base to back it up. So coming back to the petrodollar and the fiat dollar concepts, because of these two, the recycling that the world has to do for the fiat dollar and the petrodollar, all the investments went into particularly the IT sector, which created the dot-com bubble by the late 1990s. Now, on 1st January 1999, euro currency was launched. This was the first ever de-dollarization attempt by the world, wherein Europe, the European Union decided to come up with a currency which will be a common currency of trade between the European nations for the bilateral trade, which means the US dollar was out of those transactions between, if you say, for example, Germany and France. Now, this was the first ever de-dollarization attempt. So by 24th March to June 1999, US fooled NATO into bombing Yugoslavia to bring the euro valuation down. This was the first counter to the de-dollarization attempt which European Union made. Now the US started panicking because there was an urgent need to cook up some Ponzi scheme to infuse the printed dollars into the IT sector and as well the other sectors in the stock market. So by 12th November 1999, there was an act which was brought. It is called the Gramm-Leach-Bliley Act. Now, this was brought to repeal the Glass-Steagall Act requirements of keeping investment banking separate from commercial banking. All right. So the Glass-Steagall Act, which is decades old, was removed or repealed or made ineffective with this new act, the Gramm-Leach-Bliley Act, which now, mixed up the commercial banking with the investment banking, which means now the banks can, as soon as your deposit amount in your account, the banks can sweep into its own account and then invest it somewhere else, right? The same bank can now do commercial banking and investment banking. So now what happened was the entire reserve currency bubble shot up the dot-com, and that peaked the IT valuations by around mid of 2000, the year 2000. Now, the European Union said that we are not going to park our excess savings in the US treasuries and will not play the dollar and the treasury cycle, which keeps the US dollar going. Now, it's very interesting. As soon as the European Union, so-called allies, said that we are not going to play with this, keeping the US dollar, going as a reserve currency thing, the USD cycle, because entire world is supposed to invest in the US treasuries and the dollar. That is how it keeps going. Furious with that, United States brought on December 2001 China into the WTO as a revenge. And China in return promised that instead of the European Union, we are going to invest in the US treasuries. This is how, the entire hodgepodge was created. By October 2002, despite all of this, because it was just 1 year, China did not, the trade did not zoom so fast, making it the manufacturing giant that it has now become. By October 2002, the dot-com crashed with 78% fall from the peak valuations for the IT sector. This is exactly what happened. So, cut to today, if that was the first de-dollarization attempt by the European Union, which brought 75% valuations down for the IT sector, you should not be surprised. This is the final de-dollarization attempt by Asia and Gulf, which has begun, which is why the USD-UST cycles have stopped, the dollar gradually being ousted from the bilateral trade between nations, between two nations. And this is how the IT sector is right now collapsing. And it will also collapse the realty sector in China, because the IT sector of the United States and the realty sector of China, these were the two main sections where the reserve currency bubble went and settled. So it's no surprise that the IT sector is going to further lose valuations, not just the IT sector. Understand that when this new act was brought in 1999, it allowed all the commercial banks to do investment banking. Your money being risked out on their investment brains, right? It's made legal, right? 2008 crisis, was anybody jailed? No one. Absolutely no one. Because all that they do is legal.